following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome back to the show. Good to be back. My trip to London, I was attempting to do some shows from there, but it never really worked out to where my schedule was to have an hour. This hour, it was, I guess, 2 p.m, London time to get that accomplished, so I apologize. Did have a good time there. Was only there. I kind of mapped it out. Went to the airport in Raleigh at lunchtime on Tuesday. Didn't get to a hotel till 2 o'clock Wednesday afternoon in London. Had to go through New York, then London. Went on an airline. If you ever want to go to Europe now, or London in particular from New York, check out Norwegian Air Shuttle. It was $800 round trip, and they're at discount airlines to go to Europe. It was brand new Dreamliner 787, 786, whatever the latest airline is, brand new. We'll give you an upgrade to first class for less than $300, or business class to less than $300. It was kind of incredible how cheap it was. But might want to check that out. It's go to NorwegianAirShuttle.com. Their site even looks like like they didn't pay much to even have their website done. It's don't know how that equates to a safe airplane, but it's pretty cool. I was very impressed. And then Friday afternoon left there, so it was only 48 hours in London. But man, what a city! I talked to Tom on his show. I believe it was Wednesday afternoon, your time, Wednesday night, London time, and was just raving about the place. I'd never really tooled around London that much, but had some free time, and what an awesome place. Would love to go back. Saw some really interesting people at the MFX conference. It's an emerging markets foreign exchange conference, and some of the things they've got out there now, they've got platforms devoted to, for instance, the Nigerian currency crossed with the Indian currency, and those are pairs that a lot of folks, don't seek out to trade. The liquidity hasn't been there historically, and the spreads have been wide. But they've got platforms now. One of them was called F5, who focus on some of these, I'll just call them weird pairs. And market makers have come into those particular products, tightened up the spreads. There's not a lot of volume on those spreads. I mean, we're talking, market makers that aren't going to just as much as you want on both sides. And then the banks are behind those guys on the spreads. But interesting that, back in the dot-com days, there was a lot of volatility, obviously, and things were all over the place, and there was definitely a slant towards the north side on that. But I kind of envision this now, and there was a lot of smart people at this conference. I mean, it was not just a tire kicker situation where people could attend. It was all invitees and head of banks, and the guy who runs the Turkish Stock Exchange was there, Bart Chilton, a couple hundred people there, and all of them were completely in the know. I was on a panel in front of these folks, and a little bit outgunned, I'll be honest with you. But it was an amazing, eye-opening event, because when you talk about bringing market makers into these very volatile products that now the spreads aren't that huge, a bank's not going to be able to go in there and sling things around in a major fund. They're going to have to pick up the phone and try to, get some size off. And let me just tell this person, hold on. But for the regular kind of run-of-the-mill trader, there's some unbelievable opportunities if you're going to do some day trading. You can go in, pick off, 1 to 10 contracts here and there, get off some small size, and these things are super volatile. So I think that little venue, the way they're constructing it now, might be something that day traders will kind of move into on these platforms that you probably never heard of now. And, where do you hold the money? You're going to have to, talk to the platform, and you're going to have to kind of work that out with a prime broker, more than likely. But a very interesting situation. And some of these guys, the Russian stock exchange was there, just incredible opportunities on the trading side right now, actually, and it's probably going to get better. So it might be something to look into when you have some time. Okay, a couple of updates for you before we get going. I'm showing crude oil right here. I think you guys know the OPEC announcements were not exactly showing that they're going to slow down on pumping some oil out of the ground. So we're going to get that in a second. But I want to show you really quick the custom calculations on the scanner. I'm going to pull this up really quick. I'm going to show you, we've got some of the custom calculation filters here, like strong downtrend resistance. What we've done is, you're probably going to, how do these qualify? So what I've done is, and this is going into today's build, you should get a forced upgrade on this today. Spent some time on putting basically into English outside the code what exactly these particular sorts are doing, and tried to, basically make it as understandable as possible with a lot of, either or profit taken. I mean, we can't make a custom sort that satisfies short-term, intermediate term, and long-term. So what these basically focus on are long-term and intermediate term, putting those particular products or instruments on your radar screen. And these are all defined algorithms. And I tried to, again, put it in layman's terms. So those are going to be basically visually placed into a little help question mark here beside, as you go into the different sorts, you're going to be able to kind of, quickly see what's going on with the so-called formula. Want to also look at the S&Ps in just a little bit, and we want to kind of review what our breadth situation has been doing relative to the volatility that's happened in the S&Ps in general and some of the global markets. And let me get my oil chart here figured out here. So this is, first of all, we want to look at crude oil. And, we talked about, for literally days last week and the week before about, the only way we could start thinking about nibbling on the long side, even with this divergence in place that happened here, higher lows on Navigator, lower lows on price action. What we want to do here is we always want to get some confirmations. And, we looked at kind of trying to buy a couple of bounces on the way down into this around 43.5 or in that neighborhood. On the January contract, we were in a different contract looking at this back then, the December contract. We caught a really good bounce off of that. And then we came back again. And, because of that divergence, we were saying, it's not the time to really more than likely go short below this. But when we close below and then we go back and retest, I haven't been a huge fan of going short crude oil. But, the good news is it's kind of kept us out of trying to nibble on the long side because we needed to get back at least in that fair auction on our long term. And we've talked about this a lot lately, getting back above 43. That hasn't happened. I've been kind of just sitting still here, wanted to wait for that announcement to come out from OPEC. That was pretty damning for the longs here. And now, this is our daily situation. Now, and I'm going to pull up the scanner, go to my futures section. I love how this thing's so quick. Go into my WTI crude oil. And as you can see, we're basically just red across the board here, and this is factoring in all pre-market pricing. Here's my landscape view. There's really no reason, no way, nothing to lean on. And again, this is our daily I'm showing you now, to really start nibbling on this thing on the long side. So remember, things on their lows go lower, things on their highs go higher. And by the way, this might be a funny story to you. I woke up a couple of times last night and was considering sending Larry Pesavento an email because I know he talks about silver all the time. I had a dream that silver had gone down to $1. And I don't know why, but I kept waking up going, oh God, I gotta empty everything in the bank account and buy all the silver I can. And I was wondering where silver was opening up this morning. I don't know why I was thinking in a dream that silver was gonna go down to $1. It was like, this is a crazy dream. So we look at Let's look at gold first, and then we're going to look at silver. Okay, so silver we talked about having, I'm sorry, that's gold. Gold we talked about having to get back above the 1087, 1080, 1090 area. We had a new profile. We talked about this last week too, with the orange bar here happening last week, and this was reflected in the scanner. And now it's gray, and we've got the arrow down. So that's saying basically in the scanner that we're still in a downtrend. We're still below profiles on our daily here, but we've had a new profile appear, and that orange bar that started to appear in that peel back that was happening in the scanner gave you a little bit of reason that it might be time to sit on the sidelines a little bit on the short side. Now we've come back up into this 1087, 1090 area, and I'm going to pull this back up. And there's still, I mean, the dollar, we're going to talk about that a little bit and how it pertains to this in a little while. But as we look at this POC on the current profile, it's very similar to that former unfair low on the weekly. So we've got 1089, 1086.87. We've got that daily that was around that same neighborhood too. So you've got pretty serious resistance here. And as we look at our daily, there's that 1090, 1086, 87, 90. We're back up into resistance. Friday, we hit it, 1086, 1087. I'm going to look at this as just a gift horse in the mouth, whatever. I think the dollar's going to rally a little bit now again, as we saw it pull back last week when I was in London, and this may give this a chance to fall off again. So I'm still looking at this from the short side. Stops are above 1090 based on my appetite for risk. And as we look at silver really quick, and we're not in the right contract here. Damn it. Excuse me. Somebody didn't set up my screen right. Sorry, guys. I apologize. I've got the wrong symbol in. We're going to try to get that corrected. Still not right. Ugh. Let's get back to the continuous contract here. There we go. So the March contract in silver. Here's the situation here. Got about 15 seconds left. Still, again, uglier than gold. More ugly than gold. And we've come right up into our resistance area that we could count on. We had one at 1427. We talked about not being able to nibble until we got above there on the intermediate, but now we're into even bigger resistance here at 1465. We're going to talk about that deeper when we come back.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, guys. Welcome back to the show. We were kind of finishing up with silver here. Let me just access the March contract. Again, we always look at things. This has been in a downtrend without question, been a lot weaker than gold, had a little bit of a divergence here. But, we always look at situations like this, trading below the box. We talked about not being able to take any longs until we get, even on a contra trade basis relative to that long-term trend, getting back above 1426.27. Again, that was a resistance area. This is our daily. I was in transit on Friday, so I wasn't playing around with this, but we've gotten to another resistance area, 1465. Still looking at this, just like gold. I think we've got some good chances here to basically use that as resistance to sell off. I don't know why I'm doing my hands like that, but that's the way I'm looking at gold and silver. Still downtrendish, and opportunities to sell. Turn the wrench the same way. Okay. So 10-year, we got to take a look at that because, good Lord, while I was in the conference, I think the 30-year moved 4 handles. That was amazing. So here's the weekly situation on the 10-year. Last week, we almost came back up into that resistance area, kind of got into that DMZ, if you will. Here's the March contract. And right now, it's probably writing on the wall here that they're going to raise rates a quarter point next week. Even 126 now is going to be the resistance area for the 10-year. Still completely amazed how this thing's not selling off even more. Something to pay attention to, but a quarter point's a quarter point, and they're going to say, hey, we're going to watch things. And the ECB, when I was there, you guys probably aware of this, the 10 basis points. I mean, we kind of did a poll in the event, and most of the guys in the know were bare minimum 20 basis points, and a lot of them were 30 basis points. So that kind of shocked the marketplace. It obviously shocked the Forex market, which everybody had to run out of the room and yell at their desk, which was fun to watch. 126 resistance on the 10-year right now, and that's the way that one works. So let's see here. All right, so let's go back to the dollar really quick. And just to cover all the bases here. And, we cover all these bases, and we don't have a lot of time to get into stocks a lot of time, but a lot of the time. But, these are the things that, you got to be aware of, in my opinion, that the market's looking to in general for trading the stocks. And, we took a look at the dollar. We talked about not selling that area. That was a profit-taking situation around 128.29. And I talked about, I think we're actually going to go higher. We only went higher just a smidget. This is our weekly. Had a new profile appear. Now you've got new support at 90, long-term mega support at 97.89. Now I'm going to drill into some lower-term time frames, but I was a big fan of not shorting against this, just taking off some weight. I even left some contracts on a trailing stop there on the dollar, and actually I got stopped out while I was in London. But we're coming up into now the bottom of our profile on the daily, but we've got a new, and I want to go back to my weekly here. The thing I want to impress upon you is we've got a new profile that's kind of edged higher. There's some supportive areas on our newest profile at 97.89. Just want to restate that. That's where long-term stops need to be now. And we're coming up into, let's see, 98.79. So what does this all mean? This means that if we can get a daily close, in my opinion, above 97.89 or 98.79, excuse me, I'd feel pretty comfortable actually putting stops below that area. Right now, I'm just kind of in a wait and see mode on the dollar. I think, put a gun to my head, we're going to move higher on this and continue to move higher. And we're going to probably ultimately retest above 100, but that's not going to happen in a day. So I think the big move that we talked about from basically the 95 area meeting that 100 area happened, or 90, was it 90? Let me make sure. Excuse me, 96 area to that 100 area, 400 pips on that, 4 big points has happened. We took some weight off, and now we're just kind of in wait and see mode on the U.S. dollar. The ruble. We're going to talk about this after the break, but I want to mention some things that were stated to me and everyone by the Russian stock exchange, and what's on the horizon for this. Believe it or not, I mean, it's some very interesting situation here. All right, guys, we'll be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
It's true. Life is all about choices. At Everbank, they're making it easy for you to make a smart one with this special cash offer. Open a new yield pledge money market account with funds from another financial institution, or deposit new funds into an existing yield pledge money market account, and you could earn up to a $500 cash reward. And if you're opening a new account, you'll also get their new higher 6-month bonus interest rate, along with their yield pledge promise that ensures your yield will always be in the top 5% of competitive accounts at banks nationwide. Open a new account or add to one. It's your choice. To qualify, you must meet balance and other limited time offer requirements. Go to everbank.com/TFNN for details and deposit options, or speak with one of their banking specialists at 1-855-750-4051 for more information. You must act by December 31st, 2015 to be eligible. Everbank is a member FDIC.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, guys. Welcome back to the show. First of all, I want to answer something Jay threw out there, our resident comedian. I don't see what you're talking about, Jay. I was in the futures section and on the scanner. I don't see. The question was, is the POC kind of hidden behind the bottom or the top? And I actually, let me go to, okay. Well, let's pull up the chart. Okay. Yeah, I mean, there's the landscape chart, on the scanner, you can kind of mouse over and see the different. Oh, yeah. No. There's the POC. Yeah, it's just, you just can't see it on that. Yeah, there it is. By the way, that brings up something interesting to talk about. And here's the chart. Yeah, I think it's just very close to it. What does that mean? That means that kind of the top of the hill, the POC, in my opinion, there's a nice webinar on probably in the archive section of the TFNN website somewhere. I think you can access it if you have access to the scanner. Basically it was the thing we did. I think it lasted like an hour and 40 minutes. I think we chopped it up a little bit, but it talks a lot about what these colors and lines mean and how they are transposed into the scanner from the charting, which really kind of takes a lot of the artistic part of trading out of play, makes it very rules based, in my opinion. But I want to talk about the 60-minute. This was obviously a really big move that happened, and I'm just gonna, I don't need to do the math for you. This is like a 50-point S&P move, but as we look at these moves on the S&Ps, a lot of it's still up there, Jay. Okay, cool. And I'm doing, by the way, I've got time to do it this week. Finally, is a video series, not just on you click this thing and this happens, and you click this happens. A 1, 2, 3, 4, 5, 6 step or even more video series on the how to use this scanner to actually hopefully make some points. So I think that's going to be very interesting for folks. We've kind of been delaying all that because we wanted to get the scanner as final as possible with all the bells and whistles in it that I had wanted. And this scanner really has a lot for a lot of different types of traders and folks out there. One of them, without question, is this breadth calculation. And I want you guys to just take note of this. I want you to, these speed dials a lot of people get addicted to whether they're positive or negative. Okay. And that is a very simple math calculation, actually, that just kind of tells you the breadth of the marketplace relative to profiles and whether there's a greater number of stocks trading above profiles or a greater number of stocks trading below profiles. But you need to also pay attention to some degree to this blue area. All right, this blue area is dynamic as we refresh. And what does that mean? Like, for instance, on the daily, there's a very serious large part of the S&P 500 on our daily time frame that's trading within profiles. And that means that big blue area is a graphical representation of that. And as we drill into the chart itself, we see 227 stocks trading within the balanced area, and I just got logged out, and I'm not happy about that. So we're trying to upload a new version, and that's irritating, but we're going to get through it. Restarting it, and I'm going to continue about that middle ground area and what it actually means and how to kind of gauge this tug of war situation that really is either happening or is not happening. So did I cover everything happening or not happening? So as we look at this, and I'm going to wait for this to repopulate here. It should say, okay, still retrieving historical data, please wait. One of the reasons too why this scanner is so quick, I can go in here and add a zillion different indices at the same time and all their components, is it basically shoots you all the information and then gives a kind of a data CSV file type update to your computer every 60 seconds. And we're actually shortening that to 30 seconds now. But as we look at this, okay, we've got our historical data now. I'm going to pull into the daily again. And as this pops up, I'm going to blow this up. I'm assuming we still got our charts, right? 227 stocks. Almost half the S&P 500 is trading within profiles, and a tad above, tad below. So there's not a lot of tug of war going on. When you start seeing the middle ground evaporate and those top and bottom numbers above and below start getting populated, that's the tug of war, and that's when things can really, really change, when stocks start converting over. And what does that mean? When they start converting over from below to within, and then you start getting that momentum that the leaders of the pack in a non-weighted fashion, for instance, in that example above, start really running the show. Now, if you look back in time, and one of the gentlemen that called in from Florida, I think it was last week or the week before, he was a CFO of a former CFO of a bank down there. He was talking about these crossovers and finding more and more things possibly to pay attention to. A lot of times I'll block that out just because I want you guys to see, and sometimes this lags a little bit from the price action, as you can see right there back on October 2nd. Back on October 2nd, we had a crossover, but let's just look at the middle ground relative to that. We started converting, all right, and we started converting over as we saw the middle ground start to increase ahead of time. This is our daily. That means that a lot of stocks started converting into that area. So that gave you an idea that, there's some things happening here in this little area, and we had a volatile time back on October 2nd. So, these are, when the VIX is high, you actually need to drill down into even lower time frames to look for crossovers. You don't need to. It's just going to give you more to the hour I guess, crossovers, 2 to 4 hour crossovers in this case. But as we look at this, long-term guys and guys who are either trading portfolios or want to hedge their long portfolios or go to cash or what have you, and are not really short players, you want to look for these crossover long situations where you can kind of like get your toe back in the water. But the lead time, if you look at that, I'm going to blow this up a little bit here. If you look at this, where's October 2nd? Right there. Yeah. As you look at this middle ground start to climb, it's an indication in itself ahead of time that we're starting to have some conversions. All right. And as we look at this, let's go to our 60-minute here. And just for example, as we started having that tug of war there and converting over top, the other morning we just converted over. I don't know, the futures were up the other morning, but these are pretty decent day trading S&P systems in itself. Looking at the 60-minute, we've actually placed, and we're actually in the newest version, we're actually having all the profiles here listed on every time frame, so you can really see where the inflection points are. But you have to be aware of the long-term inflection points on the index itself. All right, and I'm just going to show you those graphically represented here in the chart. This 20, 88, 89 area has been a big area. Now we're coming off that a little bit. We talked about crowding it, and we finally shot through the other day. But we had our breath start to get kind of tenuous on the, I'm going to pull this back up. Get a little tenuous here on December 2nd. All right, so that coupled with getting back down below 2089 allowed for some shorting opportunities. Even, that this number is still not that powerful. I mean, this is just a scant above positive on our daily profile breadth, and the middle ground is very voluminous. I mean, half the S&P is balanced here. I don't see a lot of edge here to trade the S&Ps long or short right now. You'd want to see the breadth get a little bit more positive and clean and clear, get back above 2089. All right, right now we're going to have to wait and see how these stocks open. But if we open negative and some of these stocks on the 60-minute will start converting over, then it would be, and especially the 240. And if the daily starts getting negative, then I think you can really start looking at shorting opportunities with stops above 2089. And obviously this is our 60-minute view here. We're starting to, let me just point this out. Go back to our futures section. Well, am I missing something? Here we go. So you see the first hints of a downslide here on our 60. This is the first red shoots, if you will, but we're still, we're sitting here now, still in an uptrend by definition on our daily, that unfair high 2089. I've said so many things in the last 5 minutes. I want to clarify this. We look at our breadth, and let me go back to that, for kind of a guidance system on if the internals trading futures are cooperating with the future itself and paying attention to those inflection points. And in my opinion, the long-term inflection points are where I kind of wait and wait till we have those in play. Right now on the futures, you saw that we had top 7. All right, and what does that mean? That means we've been in an uptrend by definition on the daily for 7 days still since the last time we broke out, and we're at an inflection point on a relatively intermediate time frame daily. All right, weekly still relatively positive, but we've got some conversions over on our, as we just noticed. I can't seem to find this. My glasses are, we've got some red shoots happening here for the first bar. So that tells you, one, it's the first time that we started breaking down on our shortest term time frame that we look at, 60-minute, and we've actually just come off of this inflection point at the 2089 area. So are there some opportunities here on the short side? Probably, but I'd want to wait and see a little bit farther and let some of these stocks open and start populating more so what's going on here with our breadth. Right now, that's a pretty not very rosy situation for shorts. But we've got some things that might happen here when more stocks open, and these breaths are reliant upon stocks actually physically being open and printing. Just reading the DIN here. Okay, the Aussie dollar. All right, let's take a look at the Aussie dollar. Let's look at it first of all in our Forex section. Where are we at here? Got to go back to the top. I'm lost again. All right, so just looking at our grid here and looking at our landscape view, we've talked about the leverage on this particular product is probably more than likely right now from the long side, and we want to go back into this and just hit this really quick. There's the Aussie dollar. We looked at this from the divergence standpoint, just to review a little bit here, that it was not really probably beneficial to start looking at this exclusively from the short side anymore and wait until we got back above and closed above this big number, 7169, 7170. So that happened, and then we retested. And if you guys can see that, that was kind of a really nice high probability setup to get some points. We actually almost hit 74 there. So about a 250 pip move, and now we're coming back into the top of the hill. All right, on the long term. Now, that coincides with the top of the box on our daily here. So I'm not opposed to looking at this now as another buying opportunity around that 72. When you get progressive glasses, you're going to be doing all these weird head movements, by the way, if anybody's got progressives, to try to get it in the right area of your spectacles. But right now, I think I'm seeing this 72, 61, 62. That's the big number on the buy side, and that coincides with our POC 72.77. So you got some leverage here on the long side, in my opinion. I'm still looking at this to trade from the long side. We haven't reached our targets totally up top at 74.39.40. So I'm looking at this as a buy opportunity still on the Aussie dollar, and we've got a ton of support here. 240 unfair lows, daily unfair highs, and that POC on the weekly, which is a big number. Jay, I'm considering the operation too, but can you do that at my ancient age? I mean, I don't know. Does that work? Getting radial care autonomy? That's not what they call it anymore. It works. Okay. I might be all in on that concept soon. I'm tired of, especially when you get near beautiful women, you're doing that. All right. So anyway, as we go down the list here, we're going to take a look at the DAX really quick. We're going to talk about this when we come back from break, guys. And any questions, throw them out there in the den or call in. Would love to hear from you.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge Heard Daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartleys, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi guys, welcome back to the show. Somebody that was asking about 2067 as possible target on the short side on the S&Ps. I'm not so sure that the S&Ps are going to just continue to go down. We're down 10 points off the highs this morning already. But as we look at this, in the scanner, we're looking at a 4-hour. There's that 2067 area that someone's talking about there. We haven't had all the stocks open. The breath's starting to change a little bit here pre-market. Remember, these calculations are now happening pre-market as stocks open, but we just don't have all of them opening. So this is a little deficit, so to speak. You're starting to see. There's another little cool piece of information in here. I'm going to drill into the 60. You're starting to see quite a few new profiles appear up top on the 60. All right, that's a little bit of an indication in itself. But looking at the chart and looking at the pullback so far on the 240s, we may have a new profile attempt to appear here pretty soon. So Jay, these inflection points may change a little bit, and we may have a higher target here. So you just have to pay attention to that. But right now, all things considered, if we get our daily breadth to roll over negative, that's going to be really, really cool. And I would say that's 2067 area or a possible new 240 number that will appear. Will definitely be in order here. But remember, a lot of these stocks haven't, opened yet and started printing, so we're a little bit handcuffed here. So that's the situation in the S&Ps. You've got that big number 2089 to play around with here. I don't like how this thing sold off and went right back to that number. That's concerning to say the least. We caught a pretty good move down. I mean, I was watching this when it happened, and we did get some decent breadth numbers that started to roll over here, especially when we closed below that. Tom and I talked about this on the Wednesday show. We popped our head up, and then we reversed and we closed below, and that's not a good sign. That wasn't a good sign, especially for that Thursday setup. As we closed below, went back and retested, and the breadth kind of stayed sluggish and negative there. But when we reverse, that sucks for sure. So be aware that we're still kind of hanging around up there at that 2089 area. I'm not extremely bearish on this. Having that reversal is just not good. And when we have a big report coming out like we had Friday, you got to be aware that could have a huge impact on the market. If you watch this show enough, that we generally suggest that if you are not into throwing the dice on the table, that you might need to stay out of those pre-market situations when they, once a month announce a big number like that. So in my opinion, with the breadth staying positive, if we stay positive, you really don't have a ton of leverage here on the short side. So Jay, I'd watch out for getting too heavy on that trade. Okay, so we've got about 30 seconds left here. I think we're going to hit the DAX, but I want to hit something else really quick. We talked about the Russian stock exchange and at that particular conference and the ruble. And believe it or not, I mean, JP Morgan and big, huge backers, big banks have moved into that area to back FX, clearing, prime brokerage. Had basically one of the top guys from JP Morgan at the Russian Stock Exchange was at that conference. And this ruble is going to become something a little bit more easier to get into to trade against some of the other currencies. So you might want to read up on that. Stay tuned for Larry. We'll pick it up again tomorrow morning, guys, same time. Have a good day trading.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.